Hello, Mark Sturdy here with 7 Days Ahead's highlights for this week, the 24th of May. Let's look at the summary. We seem to have reached a certain state of pause in the dramas in the markets so that we only have one clear, strong view, which is being bearish of the S&P 500. Let's look through why we are standing clear of all these other markets. Let's look at the dollar euro as always. And the reason why we're standing clear here is that the market has moved far and fast and is now right at the bottom of a major trading range established since 2015. And as far as we're concerned, the market has to break unambiguously beneath 103.40 before we want to re-enter the fray. So already we can see in the very short-term charts over the last week it bounced, and it could well bounce further. This isn't a particularly exciting structure for suggesting a stronger than ordinary retracement in a strong trend. It could bounce a good deal further. Not a buying opportunity for the. I beg your pardon. This is dollar sterling. This is not particularly a buying opportunity for the euro, but it is a retracement. So we're standing clear. The same goes in much the same in dollar sterling, that we are approaching the bottom of a long-standing trading range here. We need to have an unambiguous weekly close beneath 121.44 before we were selling the sterling again. Moving to stocks, let's look at the summary. And as I say, the one interesting market we feel is the S&P. Here we have the rollover of the S&P from unambiguously bull market to a testing of the bull market in the very long term. It's already been tested and I think found wanting in the medium term, the weekly chart, where the market has broken down through 42.38 and failed to rally back through 41.01. You see, the market had an attempt to trade beneath here and had another look at that breakdown level and hasn't managed to break up through it. So we think the bears are still firmly in charge. Let's look at this. The Euro Stoxx is under pressure too. It's testing this very long-term band of support from way back in 2015. We can see it traded well beneath it and then closed above it or within it once, twice, and now we're having another go to trade beneath it. A close beneath this would set off alarm bells for Europe, or the Euro Stoxx 50. We haven't had that yet. That's obviously a monthly issue. We can see that the rally to get back in the medium term through the resistances there has failed. So we are bearish. We're not long-term bearish yet, but we are bearish. So Euro Stoxx under pressure, not in all time frames, whereas they are, the bears are in, it seems to me, victorious in all time frames in the S&P 500. Bonds, we are steering clear. There's been, of course, as we know, fast and dramatic moves in higher yields across the board, typified by the lovely head and shoulders reversal pattern here that drove yields up to just short of 3.5. Not surprisingly, there's been a retracement. None of these retracements have a great deal to recommend them in terms of trading, except in the very short term. You can see this is the price chart, a mirror to the yield chart, obviously. There is the makings of a head and shoulders reversal there that might yet drive up the market in terms of price a bit higher and therefore down in yield a bit lower. A perfectly reasonable reaction after such a fast move in one direction, but not yet convincing that anything other than higher yields are in the offing in the medium and long term in the future. Commodities. We have no strong views here either. The particular one I think of interest is gold. Let's look at gold. Naturally, we in chart terms, the idea of pausing at such a crucial historical level from 2011 to 1920 is perfectly natural. We were excited at one point thinking there might have been a bull a bull double bottom completed, but that's failed by this pullback through here. There was a key reversal there, weekly key reversal there. That might have been a clue. Whether this is a breakdown indication there, but yet a break back through the diagonal. Obviously, it looks as if we're going to test up through to here. In short, there's no clear view yet. It's dithering around, and we need some clarity before we get involved. Thanks very much.